All right, what is up, traders? What's up, tycoons? Time to give you guys an update on gold. Now, we've got gold futures making new all-time highs, got GLD making new all-time highs. We'll break down both of those charts for you guys. And then we're going to take a look at a few ratio charts, okay? Gold actually outperforming the NASDAQ 100 here recently, even outperforming the S&P 500 here recently, okay? And, I know a lot of people are interested in the gold miners, so we will break down the gold miners ETF. But to me, it's just not worth it. Okay. And we'll break down why, but huge discrepancy in the performance of gold and then the performance of the gold miners, right? So we'll dive into that a little bit deeper. And then we'll take a look at some ratio charts of GDX here, the gold miners, just to give you guys a nice breakdown of that. I'd almost rather play silver than I would the gold miners. We'll take a look at SLV and break down some ratio charts here of SLV versus the S&P 500 and the NASDAQ as well. It's going to be a good video, but as always, the content provided on the channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely new free newsletter for you guys. It's called Investment Intelligence, giving out free valuable finance content, free trade ideas, and I try to sprinkle in one of those free trade ideas every single week. I'll show you guys the chart, highlight all the conditions on the chart that we're looking for in the setup, and you can go back and review many of the previous articles that I've written on the newsletter. There's a website associated with it, and since it's completely free, you guys can check out that website and check out the articles anytime you want. Okay, now if you do want to pay, I have the Investment Intelligence Discord. That's only $10 a month, and in there you get full access to all my different analysis, all my different trade ideas, custom scripts, indicators, valuable resources, many other things. Here's some from the past week or two. We've got iClean. This is a clean energy ETF going over the falling wedge, the cup and handle, just highlighting what it is that I'm looking at. Very nice move there on iClean. Then Intel was another one. Okay, weekly chart for Intel was retesting a key zone. There was a huge order block for almost 1.5 million shares at $43. And Intel options ended up paying very, very nicely, whether it was close dated or long dated. Sign up for the Discord. Link is in the description, $10 a month, or just sign up for the newsletter. That one's completely free. Now let's get into the video here and talk about gold futures. Now, it's pretty much been tracking the analysis very, very well. Okay. And, initially we, traded this 5-wave structure to the upside. And from there, we expected an ABC correction. Now, this was the point here where everyone was extremely bullish. Okay. And this is where everyone was extremely bullish. And then we got our correction and all of those bulls disappeared. But I wanted to remind people, that, hey, we're still in a bullish structure. We're still in a bullish setup, and we're probably going to continue going higher. Now, when it comes to key levels, right, we just broke out past 2131. So if we do get a little bit of a check back or pullback, 2131 is going to be a key little zone here that you want to pay attention to. But really, the next target up above is going to be 2252. So roughly 2250. Now, after we come up to 2250, all right, above there, we've got 2381 to 2447. Ultimately, I think that is where this next cycle is going to take us in gold. It's really just a matter of when, not so much if. In my opinion, it could happen rapidly, or it could take a little bit of time to progress. We'll just have to see how it goes and how the momentum continues in gold. Now, when you take a look at the GLD chart, both of these charts here, right? You see very clear old resistance, old supply, old supply, old supply, and we're finally getting a breakout. This is a huge multi-year, basically around a 4-year base that we've got. Now, the larger the base, the larger the rip in your face. So these are just the beginning price targets here, right? If we're truly breaking out from a multi-year base and going to start a bull cycle in gold, the price targets ultimately can run much higher than these targets, right? But we're taking things one step at a time. And so for GLD, the bullish price target here ultimately is going to be 221.79. So let's just call it 220, 222, right? Now there's going to be a little bit of work to get there. But what I really like is that the RSI just broke out of its recent bearish divergence. Now, a lot of people look at these divergences and they don't really trade them properly, okay? The RSI is going to tell you when something is overbought or oversold. right? That's typically how people use it, but that's more of when it's trading in range, okay? And so you can see that we were stuck in this large range here for a large period of time, right? We're stuck in this range and we look at our RSI and, we see over here, we're overbought. We start to pull back on the chart, right? Pull back. Okay. And over here, we're oversold. Okay. Oversold right here. And then we start to pull back up, right? And then we get overbought over here. And what do? We end up pulling back. And what we've just done now is we've just broken out, and the RSI is still not in overbought territory on the weekly time frame. All right. We actually had a bearish divergence, which if you're not familiar with that, take a look how there's highs here. Okay. And then we make slightly higher highs over here. And what we see on the RSI is actually a high and then a lower high at this point. So most people will tell you that this is bearish, that this is a bearish divergence, right? And they would be correct. But when you see these breakouts, and for me, whenever I know we're in a bull market or I think that we're about to flip bullish, I'm not looking at the RSI bearish divergence as a signal that, hey, the stock is about to crash or whatever it is that I'm looking at is about to crash. I'm looking to see if we can break through that divergence trend line. And if we do, that often is going to signify a breakout in price action here as well, which is clearly what we got. Now, whether or not we continue following up in a straight line, or if we start to see some consolidation or a check back, we'll have to see here. Okay. But this is definitely a strong breakout. And for GLD, 194 to about 190 is, going to be your check back zone, right? So if we come back into these areas, it's really easy to come in here and set up a nice risk reward trade with a stop just below the 190 area, maybe some of the recent lows around 185 or something like that. And then again, you're targeting 221 to the upside. So very, very good risk to reward, setup there if you have the patience for it, right? Now, another thing that I want to highlight is that one of my favorite patterns, the J hook. Okay, so the J hook gets its name from looking like a J, right? And you can see that that's exactly what we got here. We got the J hook, and this is one of the highest probability trade patterns there are. Okay. And all you have to do is take out the previous cycle highs. And that's exactly what we did. So we came up here and we formed a very nice J hook. Anytime you see this setup, it's definitely one to keep on your radar. And as I mentioned, as soon as you break out above the high of the J hook, the beginning of the J, it's a really, really nice setup. Okay. And you could have used the RSI also here as a little breakout indicator. So if we were to get a pullback, right, you want to pay attention to those levels that I mentioned, but you also want to pay attention to your RSI. Okay. Can we bounce off of this trend line here? And even if we go sideways, that's going to be a bullish look, right? We don't have to break out, retest, and go straight up. Even if we break out, retest, and go sideways, that's going to be a bullish look for the stock. That's going to be a bullish look for gold. Okay, so that's the main things that you want to pay attention to there. Now, when we take a look at some ratio charts, we've got QQQ divided by GLD right here. So what this is, looking at the performance ratio of the NASDAQ versus GLD. So if this is going up, it means the NASDAQ is outperforming gold. And what we can see is we just broke through a key trend line here. All right, there was some bearish divergence here on this chart, right? And that was an indicator for us to look and say again, hey, are we going to break out of this, or can we break through this trend line here? Is this going to be a leading indicator that we can break through this trend line? And you can see, really since the middle of February, gold has been outperforming the NASDAQ 100, which is really surprising. Okay. And then for the SPY, you see an even stronger outperformance here. Now this one is getting almost oversold. Last time this was oversold, we saw some significant bounces, right? We saw a bounce here. We saw a bounce over here. So, this kind of just reinforces the theory that, hey, maybe potentially gold starts to pull back a little bit after such a strong breakout. But it's definitely something that's not like a bearish indicator for gold, right? If you're bullish gold, this is something nice for you to see. You see it outperforming the broader benchmark indexes, right? Now, let's take a look at GDX. Now, we do have an inverse bump and run pattern here. Okay, I know I'm hitting you guys with some patterns that you may not be familiar with, but an inverse bump and run has a prevailing downtrend, and then you get an aggressive bump down in price. So this is the bump right here. If we can break through this yellow trend line right here, this would start the run. And in a run of the inverse bump and run, you're typically going to break both trend lines and come up to where the pattern began, which would put GDX around that 44 area. Now, one thing that I do really like about GDX at the moment is that we just reclaimed and bounced off of the anchored VWAP from the highs here in, the early 2010s, in the early 2010s, right? That's what this purple line is. An easy way to understand how the anchored VWAP works, if you're not familiar with it, if price is trading below the anchored VWAP, this means that the average buyer is underwater. And if price is above the anchored VWAP, this means that the average buyer from the time that you anchored the VWAP is actually above water and in profit. And so once the average buyer is above, that's generally a bullish look. You can see we put in a nice double bottom here right off of the anchored VWAP. All right, and the neckline would be right around here, around 32. Also, strong resistance is going to be here at 33, 31. So be cautious of a breakout, a failed breakout, and something that, returns back down. That's definitely something you want to pay attention to. But ultimately, for me, above the anchored VWAP, GDX is going to be bullish, and really above 33, 31 is when you can see some nice returns in GDX, right? The next target is going to be that $44 to $46 region. Okay. I talked about performance. Okay. And, if you take a look here, right, since the beginning, GLD is up about 209%, and GDX is actually down 18%. Right. And, that's just not attractive to me. So, you would think that the gold miners and people typically think that they're higher beta. So, when gold starts getting running, you would think that gold miners would outperform. But to me, that just really hasn't been the case, right? And that's something that's been pretty evident to me. It's one of the reasons that I typically don't trade at GDX that much. I'd much rather trade GLD options or even gold futures. So I do just want to give you guys that perspective. And you know, some people like to look for the laggards. Okay. And that's a strategy, right? Is hey, maybe it's time for the gold miners to catch up to what gold is doing, right? And to catch up to the gold performance. Maybe that's true. Okay. I don't know if that's going to be true or not, but what I do know is that it has been underperforming, and I'd rather, trade something that's a leader rather than a laggard, personally myself. So I did just want to offer you guys that perspective. When you take a look at the ratio chart here of GDX versus SPY, rejection, rejection, rejection. Maybe is this thing gearing up to potentially break out? And could we finally actually start to see the gold miners outperform the S&P 500 as we have seen with GLD versus the SPY and the NASDAQ? When you take a look at silver, silver's pretty interesting here. Okay, another one with a huge multi-year base. All right, and we've basically got this giant pennant forming here on our weekly time frame, bullish above 2071. Okay, as long as silver is above 2071, I think you can target the highs here of 2351. Now, if we end up breaking out, right, and we can break out of this pattern here and get above 2351, well, then we're going to be retesting the highs of $28. That's going to be your next target. So, in terms of, playing leaders versus laggards, I mentioned that with GDX, maybe silver. Okay, if you're looking for something with a little bit higher beta, okay, or you're trying to play a catch-up trade or something like that, maybe silver is the one that you can play. All right. It's got a nice setup here, and it's squeezing. Price action is squeezing, squeezing, squeezing. It's getting tighter, and it's very close to breaking out. Now, is that a guarantee that it's going to break out just because gold is making new all-time highs? No, of course not, right? They all come with their own risks. And I'm just here to try to present you guys with some different trade ideas, some different perspectives, give you guys my thoughts on the following charts. Now, this is the SLV SPY ratio chart. Rejection, rejection, rejection. One thing I will point out is the MACD is about to cross here. So, could that be a potential sign that silver is about to start firing if we can get this MACD to cross over? You look at the same chart with SLV QQQ, and silver looks like it's ready to break out here relative to tech, relative to the NASDAQ 100 as well. The MACD is very, very close to crossing. It's curled up to the red line here and essentially almost crossed. Looks like it is forming a tiny little base right here. We'll see if this can break out and if silver can actually start outperforming the NASDAQ, similar to how gold and GLD have done. That's it for today's video. Don't forget to smash the like button, subscribe to the channel, join the Discord if you guys want access to all the different plays, analysis, trade ideas that I'm looking at, over 20 plus swing trade ideas every single week. All right. Sign up for the newsletter. That's completely free. Links for all of those are down in the description. And if you enjoyed the analysis in today's video and you ever feel like you need that one-on-one personal touch, well, you can come to my Ko-Fi page and click on the commissions tab. Right in there, you can book a 30-minute or a 1-hour session. You can also request a YouTube video on a specific topic of your choice. And they also have this really cool buy a coffee button, basically a way to leave a tip or donation for all the free valuable content that I do put out, such as the newsletter and such as these free YouTube videos. Now, there's a link in the description to access that Ko-Fi page, links in the description for the Discord, for the newsletter, for everything. If you enjoyed today's video, all right, I think you might enjoy this next video here as well. So be sure to click on that one.